channel. If you're new, make sure you subscribe, you like the video, you share the video, you comment also, because I feel and that believe that this is valuable information that I'm talking about here. So stay throughout the end up until I finish so that you gain so much value, so much insight into how best you can even approach these charts from a major institutional perspective. So I'm going to, in this next phase, I think this is episode 4 now, I'm going to be looking at US 30. So I'm going to be looking at US 30 from as far as 2003. This was 2003 from the monthly time frame. This was April 2003. April 2003, this is it. So I'm going to be looking at the charts from as far as April 2003. And I think 2003, I think was it 2 years old? Yeah, I think 2 years old or so. Yeah, I was 2 years old, but I'm just going to prove to you that the markets have never changed. The same way the markets have been moving 10 years ago, it's the same way they're still moving today. The only things that have changed, if you listen to what I've been saying almost for a very long time now, is that maybe the volatility, someone can say back then the volatility of news was higher, whatever. That's not really entirely a difference. The way technically, the way they have been moving, they have never changed. So people, they are the ones that are changing, not the markets. People were actually the ones that are changing in the approach of the markets, and also raising our awareness of how basically price moves on the charts. That's basically what is changing, not entirely the market. So I'm going to look at, in this particular episode, I'm going to look at it from 2003 to 2000 to 2000 and is it 7? Yeah, to 2007, right? I'm going to look at it from 2007. Then the next episode will continue from 2008, from that 2007 to 2014 or so, right? Then from there, we'll look at that from that up until 2024. So stay through up until I finish. So this is the monthly time frame, 2003 April, as you can see, right? So if ever I'm just on the monthly time frame like this, I may not, for example, here, there's no data here to the left side. So there's no data to the left side there. It's kind of just tricky to make a decision. But now, the good part is, if you go now deeper now, if you look at the 8 hour, this is eight hour time frame, right? They were basically coming down here. They're basically coming down, coming down. This was a bearish market structure, of which now, if ever you have listened to me from the first day, the market was still bearish, even though they had some pullback. This was a pullback. On a lot of people could have actually seen this as sort of like a mini sort of like pullback uptrend, right? Then at the end of the day, up there, they reshift again to be bearish. Then you could have taken sales from there. Then you continue selling. They kept on selling and selling and selling. So even if you go to the 4 hour, in this same region, right? So if you go to the 4 hour, this is the pullback that I'm talking about that happened within this whole phase. This is the pullback that I'm talking about, whereby they came, they broke, they created a new low, then they gave that pullback, right? So someone can literally call that a leg, considering the fact that they literally sort of like changed somewhere, somehow there, or even because of that movement that happened there, someone can call that a leg. Even if you call it a leg, it means this is going to be one of our targets once we shift again structure here. So this is sort of like you adding more flesh now to the entire analysis on your 4 hour time frame, but it's the same data that we are having on the higher time frame. So we are literally saying, if possibly if we come up there, that will be potentially our change of character per se, like this, right? So it means when structures like this now, what I just do, especially in this case, here they were strongly bearish. So all of these were selling opportunities. All you could have just done, even if you marked a 4 hour range like this, all you could have just done is to go to minor time frames. You could have gotten all those shifts to the downside, or even those levels, any other level of selling that you are going to find, you're going to find it within those ranges. All these were ranges here. There was a range, they broke out of the range, and they came back here for a pullback. They swept here, came back inside. So all of those were confirmations, and they kept on still selling, still selling, still selling. So currently here, my last level that I'm seeing here is this one. So in this case, the only thing that I need is this upside shift. Once I get an upside shift there, I'm buying. All right. I'm buying this market, and one of my first targets is there, right? Because here I don't have information to the left. I could have told you maybe whether it's a swing, whatever, whatever. So yeah, we don't. I don't have information to the left. But even though without that information to the left, using that just this current information, I could have just waited for this upside shift. Once I see that upside shift, it's time to strike. So let's play. Let's play and see how price evolved. So if you check here, they came the first time, rejected, failed, then there, boom. So right there, if this candle or the body of this candle close above there, that's actually an opportunity to buy. If ever the body literally closes above there, right? Of which the body closed above there, right? So in this case, this is my buy entry. That's my buy entry. My stop loss just below this leg, like that, because this is the leg that broke out of this uh selling range like that. So as I said, my first tip is here. Besides that level, I'm also going to consider even that highest point that I have next to there. Besides all these levels that I'm drawing, the most important fundamental thing is to always notice the structure shift. So the same structure shift, this is a structure shift like what happened here. So that structure shift like here, those are some of the things that I will be looking at in order for me to know that maybe now we're going to have a pullback. So I'll just be playing around with my time frames, 4 hour, 8 hour, daily, to see if ever there's any change. Sometimes you might think the market has changed, yet the market has never changed. It's still bullish. So yeah, 4 hour we're now bullish. You could have taken buys nicely from that level. Look at this. You're already in profit. And by the time they break this high here like this, by the time they break this, create that new high. Already these trades that I entered here, I can even put stop loss to break even like this, right? Then I'm now holding to that. And this trade, I believe it literally lasted for 1, 2, 3, 4. This is almost like a day of just holding. You're still holding, and as you're still holding, you're just looking at your candles now. You're just observing your candles. Here, I don't even need to go to the 8 hour. I can just go there, of which the 8 hour candles obviously they're now bullish. They are strongly bullish, as you can see. Even the daily, obviously, to be bullish like this, obviously on the daily. And the good part about it, if you notice now, if you look at this entry that I entered on the 4 hour, right? The daily will always follow behind what the 4 hour would have done. That's the practicality. The good part about these charts or the good part about these markets is that your higher time frame will always follow behind. Uh, if at the lower time frame give you a certain structure or a certain presentation of a certain scenario of structure, most likely the higher time frames they'll just follow suit on that same thing. So here the daily they've shifted. They were bearish, bearish, bearish. Then here now we've taken out this previous what we have not been doing here. So automatically now when the daily does like that, I know that there is potential now. There is potential for us to keep on buying, right? When I combine all those facts now, even if I come back down to the 4 hour or to my 1 hour or to my 2 hour, I'm there with this consciousness or with this awareness that now we are now going to buy for a very long time due to to what the daily would have done, what the higher time frame would have done. Most of you, one of the biggest mistakes that I've seen currently in the industry is people who, number one, you are starting to analyze from a lower time frame. Number two, you have that shorter term picture. For example, here I've seen mentors who just do one 15-minute candle or one 5 minute candle, and they're already celebrating profit. What's that? That's nonsense. That's nonsense because at the end of the day, if you really know what you're doing, trust me, if you really know what you're doing, there is no need for you to exit a trade after 5 minutes, while least you know that that trade has potential to even keep on moving in your direction for days and days and days and days. So in this case, we entered our trade there, and now our entry is now on break even. And take note of the information that we've gotten on the daily, right? take note of the information that we've gotten on the daily that we are going to be overly bullish. But now you realize that even as they will be overly bullish like that, there will be pullbacks, whatever. And those pullbacks now, there's a way to treat them. There's a way to treat them. Either someone can decide to exit once they see, let's say, yeah, I see a potential shift to the downside. I might decide to exit, right? You can decide to exit, or you can just wait for that pullback to finish, then you join in the whole movement to the upside. So sometimes it's also wise to exit, especially if ever you really caught this nicely. Then once they're not giving a pullback, you can even exit, so that sometimes they can even have those deeper pullbacks whereby they come all the way to, imagine if they come all the way to this demand and you want all this profit. So sometimes it's just wise to just for example, looking at the time frame that you're looking at, this 4 hour, and already you're actually in good profit. That's actually good profit. So once you see them starting that pullback, it's wise to, even if you decide to exit, right? It's also a wise decision. So many people, when it comes to decision making, most of the decisions that you're making as a trader, they are so terrible. Right now, your trading career is largely being influenced by the decisions that you are making every single day on the charts. The decisions that you are making and the ones that you're also not making. Right. So if you notice here, right here. So right here, this was one leg, and this is the low. Then they made a new high right there, and they didn't take out this low. So you might not have necessarily exited there. You might not have necessarily exited, right? So if you notice, they went all the way. I think this was actually, how many days was this? From Tuesday up until Monday the next week. Tuesday up until Monday the next week, still holding that position, which it has hit most of the major levels there. So potentially you can also anticipate that pullback to happen. If you go to the monthly, there is no much data. That's just one candle. If you notice, the most interesting part about this methodology or this approach to the charts, if you look at the 4 hour, it did this kind of six shift earlier there, which that's where we entered. Obviously, the 1 hour would have done that much earlier. So if I had access, the only problem now that we have is that if I go to the 1 hour, it doesn't have that data as far as 2003. So that's why I just trade on the 4 hour. But I would have shown you even the 1 hour could have shifted earlier. I would have entered there, pa, pa, pa. So sometimes, most of the times, what I normally do, even once the 1 hour shifts, I enter 4 hour, 2 hour. Once they also confirm and shift, I can even add more trades based on those other shifts. So now the monthly and the daily shifted, I think, around there. Then this is the monthly. The monthly now, when you see doing this, now or already now we now know that overall now we are potentially going up. Even if I don't have information to the left, right? Obviously, if we had it, it was going to be also an advantage. But now, because we don't have it, that's also not a problem. But this upside shift on the monthly, it tells us that we are now shooting up to the upside for a very long time. Even if we're going to have those minor pullbacks. Remember now, even if you mark your monthly, let's say the monthly range, let's say the monthly buying range is this. There are always going to be those mini pullbacks whereby it can even give you a slight pullback before the overall continuation, etc., etc. That's not a problem. That's not even a problem. The only problem is when you don't know where we are headed. That's the problem. So the monthly has changed, the daily has changed, the weekly it has also changed to the upside. The weekly, oh, this is the weekly level, of which is also most probably going to close upside. So going back to my 4 hour, my initial trade was that one, of which this one, it was also worth closing up there. Then you wait for that slight pullback. Once the slight pullback happens, then you strike again for the next movement. You strike again for the next movement. So yeah, even if we exited up there, there is definitely nothing wrong with that. Definitely nothing wrong with that. So if you follow structure, right here, they started to be bearish, whereby they took out the lows, they're taking out the lows. Same thing here. This was sort of like, remember, this is a retracement, right? In simple terms, this is a push. We just want to pull back before a continuation. Even if you go to the monthly, we're still in an overall buying range, right? That's the good part about it. The good part about it, you'll be knowing that overall, we are still going to keep buying. We are still going to keep buying, even if we're going to have those minor pullbacks. So someone like me with that understanding is very dangerous on the chart because even if we are going to have pullbacks, I know those pullbacks are not going to be for a long time, right? You get my point. So in this case, they are still pulling back, and here structure. All I need, the same shift here that happened here, is the same shift that I need here for the continuation trade. That's the same shift that I will be wanting to see there. Once I see that one, I will definitely strike all the way to the upside. So yeah, they were still coming down, coming down. Even if, and also, even if I took, let's say I took counter trades or counter sells from up there. There is no problem with that. There's no problem because I know where we are headed, and I know that even those cells they're not going to go for a long time. And those that are in the class, in my mentorship class, in my academy, they're also aware that when you're taking a counter trade like that one, you can even use the Fibonacci legs reverse, whereby you can use 38.2 as your first TP. If it comes there and it doesn't change, for example, it came here, it never shifted to the upside, you can still hold to the next one. 50%, it never changed. So you can even use those as guidelines of potentially where the market might just tap to. So those will just be guides or guidelines that you'll be using so that once the market shifts now to the upside. So here in this case, we are now here. Remember, all our highs, these are our highs, they're not being taken out. They're just being swept. This is my last high to the upside. If we shift here, I'm going to take a buy. If we shift here, I'm going to what? I'm going to take a buy position to the upside. And as I'm going to take a buy position to the upside, I can even use my extended Fibonacci legs up there for holding more that position. This is TP1, TP2. My TP3 is usually there. I know once you get to negative 100, that's a full cycle. So all of those factors, these are factors that I consider even when I'm holding positions. So even once they get to those levels, if they shift on any of these levels, obviously I can just decide to exit that position. Exiting that position there, I'm not necessarily exiting the whole entire trend. The trend, I know that just looking at my time from the monthly, weekly, daily, we are still pushing upwardly, right? Even if you go to the daily here, even that pullback, it was within a daily buying range. If you notice the daily range, we took out this high, we made a new high here. That's our new high, and where's our new low? This is one of the tricks, one of the tricks that people don't know, right? If you look at this, we took out this, we made a new high here. Okay, those are our new highs. Where is our previous low? Our previous low, we're looking potentially at this low. Someone can also include this low. Okay, so it means in this case, the range that I'm looking forward for my buys, I'm looking forward for my positions to happen within this level here. Let me just put it in a different color, in this range or in this zone here. Typically in this zone from this low, those are the highs. So once you get the shifts there, if you just play on the daily, you might not see those structures to the upside much more clear. Even if let's say someone just bought up there without understanding, uh, you might encounter the drawdown for no reason. Unless now you've now grown or matured to a level of a positional trader. Positional traders, in this case, once we broke above here, they can even buy up there, put their entire stop loss below here because number one, their capital, it actually permits them to do that. Number two, they don't mind that drawdown that will happen. So you understand? So you now as a retail trader now, you might not like that drawdown. So in this case, I'm looking forward for my buys within this leg and that leg, right? According to the daily there. Once I get my shift within that zone, I'm going to strike my buys to the upside. So here, they still failed. They came again, failed. Of which now, the good part about this, the 1 hour or the 2 hour, they would have literally shifted earlier, as I said. They would have literally shifted earlier on that. So yeah, they've done the same thing that they did here. Notice the same thing that they did here, the same thing that they're doing here. What are we doing here? Buying. No hesitation. We are buying. We are buying. We are buying the stop loss below here. First TP 0%. Second TP 27, -27. Third, blah blah blah. So this is just an extended whereby a full move. Obviously, this is an awareness that you gain with experience. You don't just know these things from thin air to just wake up knowing that, hey, once we tap 100%, that's a full move. It takes understanding to know most of those gymnastics on the charts. It takes understanding, deeper understanding, deeper, 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 deeper. Look at this. 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 Same bias, same bias. We are just having minor pullbacks along the way. I will also show you. Let me just hit some of the TPs. TP1, obviously, we have hit it. I'm anticipating us to keep pushing so that I explain the whole point after we have hit some of those major levels. But I'm just showing you it's still the same Fibonacci that is still dominating there. Still the same Fibonacci, same bias, same projection. Look at the entry. By the time they give you these other new highs and lows, already your stop loss is on break even, blah, blah, blah. You're just protecting all those positions. Look at this. And by the time we get all the way up there, technically speaking, logically speaking, already you're now in good profit, right? Already you're now in good profit. Because remember, take note, this is the 11th of April. Where are we now? We are now almost on the 11th of May. That's like 1 full month. Imagine 1 full month of the market just pushing in one direction. One direction. And notice, so even if, let's say, this is one approach that you could have used, which is also good. There's another approach whereby, let's say here we went up, then you started to give some form of pullback. Even if you decide to exit, by the time we come here and give that shift, you joined more buys there. They will come again, they shift there. You come here, you join buys again. They come back up there, they break. So that is also another approach that you could have used, which is not wrong, which is not bad. There's nothing wrong with that approach. There is definitely nothing wrong with that approach. So here, after those move, if you notice the monthly, it did exactly as we spoke about, whereby once we break above, we're just pushing up. Even the weekly, I believe also the weekly we closed above. So closing above on the weekly also, same thing, confirmation that we are bullish, strongly bullish. And those are moments where you know that that market is definitely going to buy for a very long time, for a very, very long time. So here, you could have done this. You could have added trades there, added trades here. Even here, you could have entered again, right? By the time they create those new highs, new lows, new highs, you can actually protect all those positions, right? So let's play. Of which by the time they are now all the way up there, they are now in good profit. Honestly, legitly speaking, you're actually now in good profit. We can talk all we want. If you notice here, my TP2 already just been hit. So most of the TPs there, you can literally see that they were actually being hit, right? And this is not guessworking. This is not me just coming here talking things that I don't know about. These are things that we came to realize after years and years and years of study. So by the time they come up there and start to give you, already you're now in good profit. This is almost like after 1 full month, bruh. 1 full month. And even if you follow structure, you can see how they were bullish, right? I just want them to hit 100% there so that I explain the whole movements and other entries that were available throughout the entire. Look at that. We're now in major TP3. Major TP3, that's negative 61.8. TP4 almost being hit. Major TP4 almost being hit. Look at that. Look at that. Look at that. Look at that. Pa, TP4, major TP4. Look at this. From the 11th of April to 4 June. That's like close to 2 months. 2 months of the market just pushing in one direction. And take note, if you look at the monthly, the weekly, and the daily, the bullish bias or the bullish ranges, they're just being maintained. Most of you, the reason why you think the market has moved too much is because you're still playing the small game. When you're playing the small game, you sometimes you think that the market has moved big time, yet the market isn't even the market didn't even move. Yet it hasn't even started. and you think that the market has moved because you'll be playing the small game. When you're playing it small, sometimes you think that the market has moved. If I go to the monthly, those are just two monthly candles, just from there to there, from where we entered, just two monthly candles to there. Someone will actually say, hey, this market is gone. Gone where? Gone where? This market is even on the weekly. Look at this. Look at this. Look at this. How beautiful it is. So weekly and monthly, and even the daily, I was just using, you will just be using them for confirmation that we are still bullish, of which they are still bullish also. Even the lower time frame was just giving you bullish market structure. That's just bullish market structure or bullish order flow, whereby we have this low, new high, there came, new low, there, new high, new low, there, new high, new low, there, new high, new low, blah, blah. The same thing that is happening on the monthly is the same thing that is happening on the weekly, same thing that is happening on the daily, same thing that's happening even on the 1 minute, if ever we had access to go to 1 minute, it's the same, same thing. Same thing. So here, once they've done a full rotation like that, the only most important thing now is for me to go to the monthly and reconfirm my bullish range. Because remember, we're now bullish. So in this case, I have this low and that high, right? On the monthly, let me go to the weekly. Um, So I'll just play around within that range. Inside there, that's where they can potentially give you a pullback before the continuation to the upside, right? All of those are things that we do or things that we consider when you're trading. We don't just trade blindly to place trades out of ignorance or out of just thin air from nothing. So in this case, there were so many buying opportunities, as I said, right there, right there, right there, right there, right there, right there, right there. Even here, they also gave you another small shift to the upside, which was literally around here, of which the 1 hour and even 2 hour, even 30 minutes, you could have actually seen that shift earlier like that from that zone. Then boom, -100, which is one full rotation. A full rotation has been hit. Notice from almost 2 months of the market pushing in one major direction. So here, once we shift, uh, we can even decide to exit our positions or keep on holding, blah blah, whatever. But the most important idea is to know these things that I'm talking about. When you know these things, it's easier for you to implement what I'm talking about. The only problem is when you don't know these things. When you don't know these things, it will be as if I'm talking Greek here. It will be as if I'm talking my own language here. Right. So yeah, they kept on pumping. If you notice here, they kept on pumping. Even if you go to the daily, you realize that structure kept on being bullish, which the most important thing is the market will be going up like that. The most important thing that you can do on a day-to-day basis is just to look at your daily range. Are we still in a bullish range? We're still in a bullish range on the daily. We're still pushing up here. All the bullish ranges were still being maintained. That was a bullish range. Still they maintained. They kept on maintaining all the bullish ranges. And most of your mentors throughout this entire time, they would be giving you so many crazy entries that telling you buy here, sell there, buy this. Yet if you follow structure well, so yeah, they kept on being bullish. Me knowing that we are still bullish even on the daily, even using the daily data, right? As I say that you can even use the daily data. If you use the daily data, we're bullish high, low, high, low, high, low. Then we broke there, right? After we broke, that is a high, that's a low, that's a high, that's a low, that's a high. It didn't break this low. So they were still bullish. Seeing all of that, all all you could have just been doing in this case, you would have logged profits on this low. That's a high, that's a low. They broke it. You could have logged profits on this low. Then they broke there. You could have logged profits here. Already you have logged maximum profits. You have logged maximum profits, unlike someone who just exited positions earlier down out of a lack of understanding. When you lack understanding, you always limit yourself in terms of profit potential. You always limit yourself. So if you notice here, I didn't even talk about any fucking trend lines. I didn't even talk about any support and resistance. We are talking structure. We're talking structure. We're talking structure now. We're talking structure now. We're talking structure now. Most of you get most of your mentors, they'll get to this level of understanding in 5 years later. 2, 3, 4, 5 years later, that's when they'll start to realize, hey, all this while we're still playing, we're still joking, we're still joking. So even up there, when they now give you that shift, even if you take some cells up there, there's nothing wrong because now you know that overally, looking at the, let me go back to the monthly, then the weekly. Looking at the monthly, this is still our monthly time frame. As I said, that this is still a buying range. That overall level, it's a buying range. Go to the weekly. On the weekly, this is where we broke. This is one leg, I mean. So on the weekly, they're literally having this as a buying range. This leg, and it's actually this leg here. Especially this leg and that leg. That's the buying range on the weekly. So they can just play around with pullbacks within that, which is actually also within the monthly. So any deep pullback that you see here, weekly, they know that they're still bullish. Even monthly, they know that we're still bullish, right? On the daily, on the lower time frames, that will just be new structure that will be, or new structure legs that will be formed. But that's not entirely a change of anything per se. It's just new structure, new legs, I mean, that will be formed as we'll be going forward. So yeah, the last time that we had a shift was right here, where we had our major change of character right there. So if we have a change of character up there, right? If you notice here, there was no change of character to the downside, right? In this case now, we broke here, we broke with that, then we came and broke the low. So there, that's potentially where our change of character is. So this is going to be a deeper pullback, of which now on the 4 hour, if you go to the 4 hour, you'll see it nicely. The change of character there is so visible, very much visible, which is this one. That's the change of character. There, that was a mini shift or what you call an adjustment that could have given, even if you sold there, you are selling, but with the consciousness of your structure, which is this your individual candlestick legs. That's a high, that's a low. So by the time they create this new low already, you can protect those initial position. Let's say I sell right here and put my stop loss above. By the time they do this, you can just wait for them to break out of this level. When they create this new low, already I can protect all my positions up there. Then I just watch structure. If you watch structure here, they kept on being bearish. They were still bearish. That's a high. That's a low. Then they broke there. That's a high. That's a low. So they were still bearish. So it means even if I took sales from here, right, I could have still made profit. Still made profit. Just following structure. So yeah, they're still bearish, right? They're still bearish. All I would just be waiting for is for them to change their range or their bearish range to do the opposite or to go to the opposite direction. If they don't do that, I'll keep on holding. I'll keep on holding. I'll keep on holding. I'll keep on holding. So this is the law. All these pullbacks that you see in between there, those are pullbacks that are happening within the within the range that you basically be trading. So notice here they broke to the downside. So they were still selling. Still selling. Now, let me remove this so that you understand that analysis is progressive. If I take a Fibonacci from this major low where we had our change of character to that one where we actually have that downside change of character. This is deeper understanding now. Deeper understanding things that if ever your so-called mentors would have taught you when you began to trade. Most of you today, as I'm talking, you would be profitable. But hey, things are happening. But we don't blame you. We're not here to blame anyone, but we're just saying things here. So even on the 8 hour, they're still bearish here. So even if maybe you can use this maybe as a minor first target, but if they do shift anywhere up there, you can even exit those cells, right? First target there. Let me just finish this. Then here, second target, third target, fourth target. If they if they come there, so you just be doing like that. But if they do shift there, definitely will exit, right? They will definitely exit that those sell positions. If they don't shift, it's not even a problem. So they actually look like they definitely shifted there. Let me go back to the 4 hour, which is actually more visible. Right on the 4 hour here, this was our last leg. They broke here, they broke all. They actually literally shifted nicely there on the 4 hour to the upside. So there, that was the position that you could have actually, so it means here you could have literally maximized on these cells. If you notice all these cells that you're still holding them because structure was still uh permitting you to still hold. So here, this upside shift here, that was actually a buying moment, of which now on the 2 hour, 1 hour, even 30-minute time frame, you would have even easily seen this entry earlier. Even if you didn't see this one, if you follow structure well, the highs, the high, the low there, when we broke that high, even if you entered here, okay, so if you used 1 hour as well, you could have even entered it earlier here. Even if you didn't use it, you could have even entered by the break of this one. This one, this high, when it was taken out like that, you enter there, stop loss slightly below so that you're not swept out. So in this case, you can just put your TP there because either they're going to break there. If they don't break there, they can just come and give you another leg there just to generate liquidity. You know, when they are generating liquidity, they can do all sorts of movement whereby they come there, they shift. Once they shift, they come there, they don't break there because if they break there now, the only pullback that they will have to do is within here. So if they come there, they shift here, will take sales. So it means they'll be wanting to come for another leg before the overall shift, something like this, right? Of which in this particular case, you're still holding buys. Once they get to that level up there, if they do shift, you take sales. If they don't, ah, if they don't shift, that's not your problem. That's not your problem. Also, that's not the problem of the market. If you notice here, the shift literally happened right here. If you notice here, there was a shift that happened right here. So there they were just playing back to back from within this level. This was a low, that was a high, and they literally took it out. And before they did that, they literally shifted here. So they, by the retest, they could have taken sales. And of which taking those sales, you're actually anticipating them to come and break there, which they didn't. So those are just other minor opportunities that way within our overall structure. So when they are doing like that, the most important thing also for you to do is always to refer back to your higher time frame than the 4 hour, which is literally the 8 hour. The 8 hour, you can see the year going up, then here we came down, then here we're now going up. Same thing, similar thing. So here that was also a buying opportunity. So even if you sold there was no crime for doing that because structure-wise, you are correct. Structure-wise, you're definitely correct. Right there, selling right there, even if you waited for this pull back into that level, selling from there, it was still profit as well. So when you mature in trading, you realize that you always have those minor moves, major moves, minor moves, major moves. There will not always be major moves every time, right? Every time whereby the market just goes up straightforwardly, goes down straightforward. It won't always be like that, right? There will always be other moments whereby it can give you this short-term trades that will be having a very short range. Most of the times when they create those short ranges, they are just trying to generate liquidity, create liquidity, basically liquidity that they can still wipe out after they have generated it. So here, they just came to that same level there, which is literally here, of which after they came there, they literally also shifted right here. They literally also shifted right here. They shifted bearish there. So there as well, what would you have done? Sell again. Take note of these minor positions, 1, 2, 3, 4. Just in that one major level there. All they are doing there, most of the time, they'll just be generating liquidity, sometimes confusing people who don't have that deeper understanding. When you don't have the deeper understanding of the markets. So yeah, it's sort of like a range if you look at it. It's sort of like a range that they've generated right there. But that range, every range, it will always have the side that it will break to, whether it's the downside or the upside. Every range, it always has the side that it will break to. So yeah, they came again on this level. So in this case, you can literally see that this level here, it's sort of like still a range because they are just playing with highs, lows, highs, lows. So ranging markets, they are still present. They are always going to be there. So yeah, they shifted up, even if you took a minor buy there. It was still okay. of which now that one, you're just targeting the top of this range, which is literally here, up there. Then once they get up there, then they shift structure to the downside. You're just playing around there with the range. You're just playing around within that range. They are just giving you those minor positions, those minor trades. And those minor trades, you're just basically taking advantage of them. While you're taking advantage of them, you are not losing sight of the entire, you're not losing sight of the entire direction where we are headed in the long run. Because once you lose sight of where we're headed to in the long run, that's where most people actually, that's where you start to have problems now. When you lose sight of the overall direction where we are headed, or the overall agenda that institutions are trying to do on the markets. When you lose sight of that one, that's where you start to have problems. But if you don't, you definitely. So here you see they came to back to that level, the same situation that I spoke about, whereby they can just come there, fail to break there, then potentially come and break the downside actually, right? If they break here, it's also fine. But if they don't, it's also fine. Because now the most important thing, let's go back to the 8 hour so that you don't lose sight of what's happening. They are still playing around here. They came down, went up, touched that level, then they shifted down. They shifted bearish actually here. They shifted bearish around here. That was just a sweep that happened there. They swept, touched that level, but it was still a bearish market. So even if you sold today, you're still fine. You're still okay, right? Even by the time they create these new laws already, you can protect all those positions that you would have ended up there. Up there, like something like this. Something like this. So here you're targeting this, and you're also just looking at your structure. If structure remains bearish, you still hold on to sells. If they change, like what they done here, like what they done here, you just exit those positions nicely. No need to quarrel with the market. So eventually, they sort of like broke to the upside, of which before even they broke to the upside, they actually gave you signs that they were going to break the upside. When they when they created this leg, went up, went up, went up, then they came down, then they shifted again to the upside. When they did all those things that they did there, those are actually signs that potentially we are going to break to the upside. So even if you saw this entry late, or even if you came some hours late, you just follow the range, the low, the high, the low, the high, the low, the high. Once you mark even your 4 hour range, you can just go as far as you can go on the 1 hour, you can go on 30 minutes, you can even go on 15 minutes to enter that or to join in that moving train once you mark your 4 hour ranges. For example, there are so many ranges here, the low, the high, the low, the high, the low. All those were buying ranges. That was the low, that was the high. They just pull back, they sweep there, but they were still bullish. That was the range. They broke out of it. That was another range here. They broke out of it, came back to pull back, blah, blah. So they were always presenting those opportunities to join in the trade were basically being presented. So now we just need to get an update on the weekly to see what is currently transpiring. What is still transpiring on the weekly, they haven't closed above that level. So if they close above there, it means definitely they are now just going to. But if they don't now, here, I'm talking about this level here. If they don't close above there, it will be a different situation. So now they closed above. If you go back to the daily, that was just bullish market structure. Slight pullback here. And after that slight pullback, the realignment to be the bullish side of things was here. If you go to the 4 hour, you would have seen it earlier. Earlier. So they're sort of like just continuing to give us bullish order flow. So there you can have a leg, you can say you have a leg there and also a leg also here. Like that. Then they kept just going up to the upside. They kept going up to the upside, just giving you those minor internal legs. Whereby they give you a leg up there, they come down, then they reshuffle or reshift here. There you could have bought again there. So even if you were just playing back to back in that situation whereby after they shift there, then you exit, then you wait for the realignment, then you join in. All of that, you're still going to realize profitability. You're still going to realize profitability. And now we can even use our major time frame, what do you call this? Our major Fibonacci for major targets. Whereby we have this bottom and this high, and then we can even extend like this. So when we have this, you can see that we still have a lot of levels up there to be hit. So many levels. We have negative 27 here, negative 61.8, negative 100. Right. So even if I remove the Fibonacci just to avoid confusion on the charts, but those are still my Fibonacci legs like that. Like that. I've heard people talk about psychological levels. What people call even psychological levels are not even the real psychological levels. People are just talking from a lot of ignorance that is so crazy. So yeah, from there they just maintained bullish order flow. By the time they create these new highs, new lows, new highs, new lows, new highs, new lows, already those positions that you entered there, you can even protect them all and just wait for the level maybe that you'll be anticipating for price to still push onto. If ever it pushes straight away into it, good. If ever it doesn't, like if it ever gives you a shift, like if it does a shift like what it done there, or like what it did there, you can just exit. Remember now you're just playing with back-to-back entries whereby you come here once they shift, then you can even exit, then you wait for the realignment. As simple as that. As simple as that. So here you're just going to exit maybe around there where they shifted down. So even where they shifted down there, you can even enter counter cells, knowing also this minor range that you have. You can even put a Fibonacci from here to there, wait for that pullback. Once you get that pullback, and then you get that realignment of structure here, that was a high and that was a low, and they played around within this range. They shifted up here. Here, you would have bought here, stop loss below here, or even here, you would have also bought. So all of these entries are crazy, crazy entries that most of your so-called mentors, they are not even teaching you. They are not even teaching you. Most probably they don't also know them. There's no way you can teach what you don't know. That's the most craziest part about teaching. You can't teach what you don't know. You can never teach what you don't know. So you can only teach, you can only give what you have. So yeah, if they come to a situation like that and they shift also, that's also okay for you to exit, even if they didn't get my Fibonacci level up there, but they were just playing around with overall bullish order flow. Overall bullish order flow. So here they come, they changed character again there. What do we have? We have another swing higher high because that's the level that also precipitated or that did this change of character there to the downside. Same thing like that one. So there, the same way I said, all these pullbacks, you could have entered them, but knowing also your range, that you're looking at what range, blah, blah, blah. When you know what range you're looking at, you don't have a problem. The only problem comes when you don't know which levels are you looking at, which range, even if you enter trade, which range are you looking at, or which major TP area are you literally looking at for the market to never exceed or whatever. So there, even if you held all the way to here, you notice that structure never shifted to the upside, which is actually one of the signs that they were still going to drop to the downside. So yeah, just combining with 8 hour. Let me just go to the 8 hour. 8 hour. Even if you mark your legs like this, that's a demand. That's a what, that's a what. Even if you mark your legs like that, that's not as important as if ever order flow changes. You don't have any power but just to realign with that, right? If ever order flow or structure changes before it gets to your zone, that's not even your issue. The only issue that you have on the charts is when you want to be rigid, whereby structure gives you a certain information, and you with that data, you don't adjust, or you're not flexible enough with that data. So in this case, same thing that they did here. They also shifted internally up there. Inside here, they shifted up here, came down, shifted up again here. So all of those shiftings were just opportunities for entry. That was also an opportunity for entry. You would have bought there. Obviously, in this case, you're putting your top loss below. So let's say they come and wipe you out, right? Let's say they come and wipe you out like that. I believe that was also news. You can just wait for them to close above your zone. Like here, they closed above our zone, then they did a shift here. You could have still gotten a re-entry right there. You could have still gotten a re-entry right there. So in this case, there were two possible scenarios whereby they can just come back in that maybe supply area, then they shift again, then they come if ever they want to go for a deeper zone or a deeper Fibonacci retracement. So in this case, they just continued going up. If you follow structure, that's a low, that's a high, that's a new high. This was a pullback. There were so many other entries that you could have joined in. This was a range. In that range, there was a pullback. And that pullback, if you go to a lower time frame, your what do you call this? Your 1 hour, your 30 minute, you could have seen the shift to the upside. Same thing with this range. That was a range, this was a pullback. They shifted up here. You would have bought. If you bought here, you could have just put your stop loss slightly below. Then they gave a slight pullback. They shifted again up here again. So that was another entry as well. So all those entries, you have that negative 27 still up there, right? That negative 27 is still up there, of which also we can also introduce here another Fibonacci from this major leg to that major leg up there. We can even draw some other Fibonacci legs or some other Fibonacci levels, whereby you have a negative 27 there, negative 61.8, and also negative 100 up there. Like this, up there, like this. Is it? Like this. So those are just other TP levels that you'll be looking at to the upside. If you go back to the monthly, take note, I'm not just going back every time to the monthly because the monthly do take a lot of it to even change. So there they are still bullish and they now have a new buying range. That low there and possibly I can say the current high there like that. Obviously we'll just wait for the candle to fully close. But that will be our new range there, right? That will be our sort of like our new range there, on the monthly. Take note how the monthly and the weekly they never change. They are still bullish. That's a high, that's a low, that's a high, that's a low, that's a high, that's a low. They kept on maintaining that bullish order flow. They haven't changed. So them not changing also. The same situation that we are seeing on the lower time frame whereby the 4 hour highs. These ones they can also do the same whereby they now change everything. Yeah, they're still bullish, but they can also change everything, tape a level, then they change again. They can also do that because remember the practicality of the markets, the practicality nature of the markets, they can permit them to do also that. So there was an entry there. Where's my thing? That's my Fibonacci like this. Fibonacci like that. It actually tapped 50% from this low to that high, tapped 50%. You see what I was telling you about even this Fibonacci levels as TPs. They touched 38, touched 50%, then they changed their path. Then they kept on going up and up and up and up. Then they broke major structure right there. Like this. Break of structure. Like that. So they kept pumping, pumping, pumping. So and they keep pumping like that. And they keep on maintaining my order flow to the upside. That's the more also you keep on holding onto trades. The more they keep pumping like here. If you go back to the 4 hour, even the daily are still bullish there. Even the 4 hour, that was a high, that was a low. They came back here, that was a pullback. They kept going up. Same thing here. There was no change. There was no change here. That was a high, that was a low. Then they came, they took it out here. So there, that was where potentially you would have actually started to exit, literally around here. So there, when they broke out, they came back for a pullback. That's just a pullback, but they were basically now already going down. Of which you could have gotten your entry, I think, inside here on some of these highs, whereby this high, this low, they broke there. They came back almost to the same level there, which is literally around here. So when they come there, 1 hour shift, 30-minute shift, you can even enter that trade. Even 4 hour, the internal shift, which is literally around here like this. But also another entry that you could have caught. With that one, you could have just, and now the TP, then when you're looking at TP, when you're looking at TP, you're basically going to consider so many factors. Factors like your Fibonacci from this low to that high. That's point number one. Point number two, factors like your levels. Even if you draw levels, like I have this level, I also have another level here. All those are levels, right? Levels of demands. But you can't say, hey, just because they didn't tap they have to. It's a must. It's not. It's never a must for them to do that. So there they kept going down. Then they reshifted up here. So them reshifting up there. That's where you could have actually exited your what do you call this? Your sales. You try to buy from there. Obviously, you're targeting this as a TP. If they do change here, you definitely come out of those buys. By the time they create these new lows, new highs, already you can actually be you would have shifted your stop loss to break even already by then. So if they change there to the downside, you can even exit your buy positions. If they don't change, you keep on holding up until where they change. You get my point? So they that was still a high, that was a low, then they created a new high, they came back to here. So they're still maintaining structure there. Then here they came, they changed it, they shifted actually to the downside. So they, even if you caught some sales to the downside, there was nothing wrong. You can also use Fibonacci again for things like those. Fibonacci, if ever you caught that initial sell, if you follow structure, they still maintained. Then when they come here, they give you bullish structure. 1 hour, 2 hour, 30 minutes. You could have even seen this upside shift. You would have caught these minor buys. They came to that zone, they shifted again to the downside. This is one of the scenarios that I was talking about, that they can do this, whereby they will be wanting to come to a certain deeper level. So what they do as if they are going up, then they don't change one. They don't break above there. They just um they just come, tap that zone, then shift to the downside from that zone. So in this case, you're targeting maybe somewhere around here, obviously, because we are still in bullish order flow. Bullish order flow. We're still in bullish order flow, which here they literally changed to the upside. Here they tried, but they couldn't. Then they tapped here. They played around the structure there. So they're that playing around there, that was too much. And actually also some of the signs that we're now going to shift structure to the upside. That is a high, that's a low. Then they shifted internally here. It came down, they shifted also internally there again. So all those shifts, internal shifts that were now happening were actually entries that you could have literally entered straight away on that zone, stop loss below, and TP, you have that previous level up there. Besides that previous level, you also have our Fibonacci's levels up there. Besides all of that, the most important thing is the structure shift. The structure comes to the level, and if it shifts before it gets to a certain TP level, you don't need to be rigid about it. You just need to be flexible about it. Flexibility is actually something that is very, very fundamental. Very fundamental. So they kept on buying and buying and buying. Even the daily never changed, never changed. Then boom, they touched my Fibonacci TPs following each other like that. And take note, they never changed to be bearish. They never changed to be bearish. Look at this. Look at this. This is crazy. Super crazy. This is super crazy. Super crazy. Look at this. The daily kept on being bullish. Even the 4 hour, it kept on being bullish. Kept on being bullish. All you're just doing, mark a daily range. If you want to join in the trade, mark a daily range. Let's say the high and the low like this. Let's say you mark your low like that, you mark your high like that, then you get that pullback on the lower time frame. The realignment to the upside or the reshifting to the upside, that's an entry. That's another range. Minor pullback. That's another range. No pullback. Another range. No pullback. So other ranges, they don't even have pullbacks. That's the thing. Not every range will have a pullback. That's the nature of the market. So you just need to be smart about it. Make sure that where you're supposed to enter, you're entering. Where you're supposed to enter. If you enter where you're supposed to enter, you always be having an advantage. So here they broke, created a new high, gave a pullback here. That was a realignment. And right there, you could have bought. Broke structure, came back here, realigned there. Broke structure there, gave a pullback, realigned here. All of those were very clear. Sort of like realignment there, gave a slight pullback, alignment there or here. All of those were actually entry opportunities that were available even as they were going up. So going back to the monthly, because we have hit some of my major TP or some of my Fibonacci levels, going to the monthly, if you notice, nothing, still bullish, still pushing bullish. Even the weekly, still pushing bullish, never changed, never even turned. Those minor pullbacks that you were seeing on the weekly were just these ones, of which they didn't change the order flow of where we were headed towards, right? They didn't change anything. They never changed anything. Even these ones on the daily, these pullbacks that you're having, they didn't even change the overall direction of where we're headed to, from the monthly to the weekly. They didn't change anything. They kept on maintaining their stance, kept on maintaining their stance, kept on maintaining their stance, kept on maintaining their stance. So all these tips, imagine most of you have not been taught most of these things, how to identify a TP when there are no more, when there's no more price up there. I'm actually revealing the secret right now. This is the secret. This is it. This is it. So then they broke to the new level, came back there, they realigned around here. You could have bought here again. You could have bought again there. Go to the 4 hour. Right, there's the 4 hour. Right, should get the 4 hour nicely after we broke here. After we broke structure here. They went up, broke that, went up, played around with structure. They gave a slight retracement here. Okay. Then they went again and broke structure there, which is I said that all of these levels where they come to realign like that, those are entry points. Even here, that has a realignment here. So many entries that you could have entered there. Targeting that, obviously, structure, bullish, high, low, high, low, high, low. They were still bullish. That was a high and that was a low. They took that low out. Obviously, there you were just anticipating, even if you're going to even if you're going to think that they're going to keep buying, you could have taken those counter sells, but knowing your ranges, right? The only thing is knowing your levels, knowing your ranges. Once you know your ranges, so here they broke out here, came back inside, and they realigned right around here, right around there. That's where you could have started to sell. Broke, came back for a small pullback. You could have sold right there. Selling right there. Obviously, you're targeting what? You're targeting maybe a demand. Then they fly up, which that's not the only thing that you target. You don't only target the demand, you also target the shift of structure. That was a high and this was a low. Then we made a new low here. So this was all a bearish structure. To understand that here also, when they came back to this level, that was an entry opportunity. Besides that one, you could have also entered even slightly just here. That was a selling opportunity. Then they came here, they gave also another mini shift here. You could have sold. So yeah, they kept maintaining the highs, lows, highs, lows, highs, lows. They kept maintaining that, so you would have still held further. And also those Fibonacci legs that you previously drew, you can even still leave them because they can even guide you on where we are headed. So going back to the monthly and the weekly, just to see what's trying to happen. That's the monthly, and on the monthly, that's a new high. And we have a new range, which is a buying range, which is here. So even if they break outside of this buying range, right? I'm just giving you an example. Even if they break outside of this buying range, you know that potentially they'll be wanting maybe to create a new structure, whatever. But that's not even our problem because structure will just be structure whereby we'll follow through it. Once you understand it and you follow through it, definitely you won't have any challenges or any problems. So there, that's how you would have entered that position right there on the 4 hour time frame. So they kept on going down, and as they keep on going down, you can just shift your stop loss lower and lower and lower, lower and lower. Once we shift to the upside, That's the only time that you can exit. Here they tried, but they failed. So it means there was sort of like a realignment there. And that realignment that happened there, if you go to 4 hour, that's the 4 hour. That's where the realignment happened. And if you notice the 4 hour, this is one leg. They came back there slightly and slightly tried to close above. Then they shifted there. You would have also ended trades then. Sells, they maintained your highs, your lows, right? Up until they broke here. Then when they came here, they did some shifts there. There were some shifts of structure there where you could have actually started to buy because of those shifts. They shifted to the upside right there. Then you would have bought there. Someone would have targeted this, okay, but ultimately, you know that we are now headed to the upside, even near the 8 hour, obviously, in as much as it actually shifted later, but it actually confirmed the same thing. So that shift or there, you could have easily targeted the previous leg where we changed character up there, right? So if you are going to draw some major legs here, that day we can have another major leg. We can have a major leg there. We can have a major leg here. This is only a major leg if we go all the way to break there. If it doesn't break there, to definitely do something like da da shift there, da then da. You understand? So if they maintain to the upside, still the same thing. We'll still hold further. Then along the way, you just mark our ranges, our highs and lows, both from the daily as well as from the 8 hour, from the 4 hour as well. Then if we see any change like what happened there, we definitely just be flexible enough to adapt to that change. So in this case, that was my last high, my last low. They took it out, then they came back to this zone. After they came back to this zone, they shifted. That was actually a selling opportunity right there. There was a selling opportunity, selling opportunity. If you notice here, there was a high low. They took out the low, came back here, shifted again, came down, came back again. So here, even if you sold there, obviously 1 hour, 2 hour, even 30 minutes, you could have seen it earlier, could have entered there. So when they come back like this, you can even exit, even if you exit, or even if you should stop, even if you should stop, you should stop loss to break even. They could have taken you out on break even, then they come again, they shift again. So you could have ended again. So there are other positions where they can even take you out on break even. There's nothing even wrong with that. There is nothing even wrong with that. Here for me, there is nothing wrong, even when these guys they take you out on break even. There is nothing wrong. There is nothing even wrong about it. That's not even that's not even your worry. You don't even need to be worried about being taken out on a break even, right? It's not even something that you have to be worried about. Understand? So there was also another entry opportunity right here on this level here. So on the 8 hour, you can see structure is very solidly clear, whereby we shifted there and we are now, so that's a high, that's a low, and our new low is this one. So this was a slight pullback. That was a break. This was a slight pullback. Uh, First break was that, then they pulled back here, they shifted here. You could have ended sales there, right? Then they broke, they came back here. If they came back there, they shifted again there. So if you got 4 hour, 1 hour, you definitely seen that downside shift much better. If you look at it nicely here, that's a high and that's a low, right? Which they shifted inside right around there. So if you combined looking at all those multiple time frames for extra confirmation, you would have gotten that sell entry maybe around somewhere around there. Stop loss maybe slightly above that whole zone. And TP, maybe you can look for this previous. Someone can even target this major one down there, or even this Fibonacci retracement level. But you also follow through on structure. If structure remains, so by the time they get these new highs, new lower highs, new lower lows, new lower highs, new lower lows, already those trades that you ended up with, they are now safe, risk-free trades that all you're now just doing is they will be going down. You're just locking profits. You're just locking profits. For example, after they broke here, right? All you could have just done here was to mark your 4 hour range. That's my lower high, that's my lower low here. You can just mark it like this. So if they close above there, you're definitely maybe going to exit your sales. Nothing even wrong with that. Boom, boom, boom. Kept on selling. Very, very easy stuff. Simple stuff. Simple, simple, simple stuff. Simple stuff. Right. So if you go back to the daily, as I say that they can give you a two case scenario where they come, they do that, then they because they'll be wanting maybe to reach out to a level that they maybe they want to get there. Maybe they want to get where is another level? Another level maybe here, of which that one was tapped already. So you just be doing some predictions, but those predictions you're doing them logically, logical predictions, whereby you're not just doing predictions, but predictions that are that have logic inside them. So yeah, you could have locked all your profits above there. Locking your profits above there, you're just protecting yourself from if it does those major pullbacks, right? Let's say yeah, because that was a major break like this being a major break, if ever they give you that major pullback for per se, let's say they give you that major pullback, you know that indeed, even on the 8 hour, this I'll put my structure nicely. That was a high, that was a low. They broke here. After they broke, that was a pullback. So just above here, you would have literally logged your profits of buyers, of sales, I mean, and just now waiting upon structure. If it keeps selling, you can hold maybe those levels that will draw down. But if it changes there, definitely it will be a different case scenario like what it has done there. What it has done there, you know that now we are shooting up now. Shooting up, you can even follow this bearish trend to the downside. If you follow that on to the downside, you're just following it for the sake of targets, right? Whereby you're mainly looking forward for targets to. So that was my high, that was my low. Then they came, they failed. Inside here, they did a shift inside here. You could have bought, even if you bought here, targeting that, they didn't break, you would have exited. They came again here. So all of those were opportunities that were available for entry to the upside, just like this. And then to the upside, which level are you looking at? We have an extreme supply up there. We have levels up there, blah, blah. It can come to the extreme supply up there, then drop from there. Even if you're not looking at that, you can also consider structure or your ranges to the upside, whereby once we create those new ranges to the upside, already these trades that we entered down there, they are now safe. All you can just be doing, if you want to scale in more trades or just scale in more trades, scaling in more trades is good if you know your ranges, if you know also the current market structure that you're looking at. Once you know the current market structure that you're looking at, definitely you won't have any challenges with scaling in, right? So yeah, they've almost tapped the supply area there, which is literally somewhere around here. So them tapping there, that's not the problem. The only thing that must happen now is overall shift or overall shift of structure to the downside. So there, that's a high, that's a low, of which here they didn't fully shift. They didn't fully. That's a high, that's a low, that's a new high. Then they broke it, or did they break it? Did they break it? Because this was a buying range. They just broke outside of a buying range. Then they broke, came back inside. Then let's see. I'm trying to really understand what's really transpired on that level. So yeah, they literally broke outside, then they came back inside. They came back inside, they literally shifted that inside structure. After shifting that inside structure, let me pause. After shifting that inside structure, came back for a pullback, of which they were now bearish, lower high, lower low. They came back there. That was an entry right there on the lower high area. If you got 4 hour, you would have seen it much better, much better, whereby they sort of like broke, then they shifted down here, then they came back there. So right around here, that was an entry opportunity that you could have caught, which is sales, of which you can literally say that they were giving you some sort of like overall bearish trend or overall bearish market. So you could have targeted this low or even that other, just like this to the downside. By the time they create these new lows, new highs, new lows, already those positions that we ended up there, they are now safe. So that even if the markets decide to turn around here, we can even take that profit. You understand? We can even take all that profit that the market would have actually given us. We can take it. So here in this case, that's the level and that's a level. We're just playing around within that range. So if they decide to break out up of that range, we just exit ourselves, of which they didn't. They literally broke to the downside. So them breaking the downside, they give us more room to lock our profits maybe around there. Then as the ranges will be forming, you just keep on adding more positions on the lot items if you feel like adding more positions. But the main idea or the main point of this session is to teach you how to catch most of these entries where they begin, even if you want to catch them as they will be happening. All of that also is something that is taught. It's not something that so yeah, somewhere around here they started to give you some changes or to structure. Go back to the daily. So throughout this entire moment, I just the most one of the biggest things that you just need to check is what's happening on the monthly, what's happening on the weekly. If you go to the monthly, we're still in a buying range. That's the most craziest part about that whole phase. On the monthly, we're still in a buying range, but now on the weekly, I don't think we're in a buying range. We actually came out of that buying range. So potentially, they can just give you a major pullback before a major continuation. So once they finish that pullback, they would definitely realign back to the upside. But throughout that moment, we basically would have made good money just by following our methodology, following our structure. If you followed our structure well, so yeah, they sort of like try to shift here. Obviously, here this is one level. That's a high. That's a low. Then this is one leg. So they tried to come back there to shift. They didn't. So even if you took a minor trade here, anticipating them to shift there, they didn't. Then on the shift there, there was a sell that you could have caught. So it's targeting them to come and break that structure leg right here, like this, on the daily, like that, which is this one. So I said here, even if you caught these buys, there was nothing wrong with that. You would have still made that minor profit, whereby they broke out, came back. Even here inside here, I can see other entries that you could have also entered. Maybe when they broke up there, you could have entered stop loss below there, blah, blah, blah. Then high, low, they're not giving huge ranges here just to confuse certain people. You know, certain people in those huge ranges are involved. They will be totally confused. Hey, are we going up or down now? What's happening? So they broke the downside. They broke here, created a new low, came back again to test. After testing, they even realigned here. That was the sell entry. You could have caught from the targeting that low there, just like this, just like that, just like this, targeting somewhere around here, like this. So, uh, 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 uh. So all the realignments, like in this case, they sort of like shifted up here. They actually shifted up there. You could have bought, then they came back to this zone, they shifted up again. You could have also bought again. So even what you guys call a double bottom, the way it has been presented to most of you, it's wrong. It has been presented in a way whereby they didn't fully go into detail of what really comprises a double bottom, what's really happening on that zone, what's really going on. So in this case, if you want to look for a TP, you could have just gone maybe to your 8 hour like this. 8 hour. In this case, you can see that we are overrally. We have this. So in this case, it means your TP, you're not expecting it maybe. If ever the structure obviously remains bullish up until they break that level, it's still fine. It's also still fine, you understand? So if they change anywhere along the way before we get to the level where we'll be anticipating, it's not a problem. We'll exit. So in this case, they're not creating highs. That's a low. That's a high. So if they shift there, you could have even exited, of which here they came, they bounced. They came, they bounced. They eventually broke to the upside. It means you would have just been maximizing. So they actually came to an extreme point. I can literally see that there's a huge fair value gap there. Besides the fair value gap, there's sort of like a supply area around there, around that zone where they are playing at there. All right. So if you go back to the daily, Go back to the daily. There was a break. New high there. Let's see. They kept on. I think they didn't. They haven't fully. Let me see. Oh, they did. They did shift. They did shift. They did shift. Because remember, I said they are still bearish overall here, whereby they're giving you this swing lower high, lower low, swing lower high, lower low, swing lower high, lower low. If you zoom in here, that was a break. After that break, they had this new leg here, and that new leg they broke out, came back, they broke out again. So yeah, there were so many signs there of entry. So many signs you could have even entered even after uh, outside of the whole zone. Then stop loss just slightly inside like this. Then TP obviously you're targeting what? You're targeting this level here. You're targeting that bottom level there like that. So if ever they shift before they get there, you just remain flexible with structure. No structure. Structure, one thing about structure, you don't need to be even here when they did shift there to the upside. You could have even exited. There's nothing wrong with this. By once you see them low, that's a high, lower low. Then here they sort of like shifted. You would have bought. Then here you sell. So there's nothing wrong with this. You're just moving along with structure, right? If structure does something, you also do respond accordingly. Structure does something, you respond accordingly. Structure does something, you are responding accordingly. So most of you are so rigid to an extent that you say, why is it coming back? Why is it coming? Why is it coming back? Are you a market maker now? Are you a market maker to ask why is the market coming back? Those are not questions to be asking. You can't be asking why is the market coming back. They will come back if they want to come back. Like what they did here. They went down, came back. They will come back if they want to come back. So most of you now, you get confused there when they come back. Why are they coming back? Why are they coming back? Who are you to ask such a question? Who are you? What account size are you even trading? Is your account balance even more than $1 million? What are you talking about? So most people, they are not as flexible as they are supposed to be on the charts. So yeah, now I can literally see that overall here they now came and closed above. The good part about this, let me show you the most interesting thing about this movement. If you go back to the monthly, on the monthly, they still maintain the buying range. That's the lowest point, that's the highest point of the range. Then on the weekly, they came out of their buying range because it was literally around here on the weekly. The buying range on the weekly, I think it was actually around somewhere there. Let me put it in a color that's different. That was the buying range on the weekly, right? Of which they decided to give you some legs to the downside, blah blah blah, etc. Which they now came again here and broke outside of a level also there. If you notice, all of them, they literally gave a pullback, and that pullback was within our monthly range. That's a mystery that most of you don't know. Whereby most of those major pullbacks that you find on your, if ever there's going to be any major pullback, most of the times it will be coming from the highest point of the range to the bottom. Like here, if you notice this structure, bearish structure. Then right here, that was an entry there, obviously. 4 hour, 8 hour, you would have seen the shift. Even 1 hour, you would have seen it earlier. On the 8 hour, it literally happened outside of the box, which was here. That was a good entry point from outside there. 4 hour, it would have actually happened earlier. Once they do that, even if you follow your highs, your lows, your highs, your lows, your highs, they maintained here up until they changed character. They rechanged character to the upside. So that was a very, very crazy entry there. Very crazy entry. Very, very crazy entry. And combining all these factors, you are basically going to maximize fully. You're going to maximize full on it. If you go to the 8 hour, they kept on maintaining my highs and lows. By the time they get this new highs, new highs, new lows, already I'm protecting my profits below the lows then. And if I want to scale in, I just scale in using those ranges. In this case, you're obviously targeting the top of the range. If ever there's no shift that happens to the downside, right? If there is any shift that happens to the downside, you just close. There's nothing wrong with that. There's nothing wrong with that. If ever they do come back, let's say they go up here, they come back before they, let's say they go up, they come back before they There's nothing wrong with that. We don't care about that. There's nothing wrong with that. There's nothing wrong with that. You just need to be flexible enough to. So if you go to the daily, let's see this level. They rejected there. Let me see if ever they eventually close below, which is where you could have maybe um logged some profits there. Even if you logged, I believe they would have taken you out. Even if they take you out there, you were basically going to re-enter upon structure shifting, upon structure reshifting to the upside, because structure eventually it reshifted to the upside. What's this now? So guys, what I'm talking about, this is deeper. It's beyond what you have, beyond most of these things that you've all been told. Hey, what? Hey, this, hey, that. Hey, it's about hey. This is deeper, deeper, deeper. We're not talking small stuff here. If you think this is small kindergarten stuff, you're still you seriously need help. Serious help. So in that case, even if they shifted on our 4 hour or 8 hour on that zone that we showed you up there was nothing wrong to exit because if you followed them throughout from where we entered down there, they never shifted up until let me increase the speed. Increase the speed, 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 increase the speed. So if you check from where we entered, even using the 8 hour as a reference, all the laws they were not being taken out, not being taken out, not being taken out. So as I said, that you could have held all the way, even if they now changed, like here, where now they now come, uh, here they tried, but they didn't fully. Then they broke. Then here they did something here. So somewhere around there, that's where maybe you could have, even on the 4 hour, I believe you could have seen that earlier, whereby they sort of like did some structure there. That was a low, that was high. Then that was a new high. They came back here. They didn't take it out. Okay, they broke there. New high. Then they came and took out our low here. So even by the time they took out that internal, you would have even exited. You would have even exited positions. So by the time they give this realignment, like here, this is the realignment, you would have still bought again. 1 hour, 2 hour, 30 minute as extra confirmation there up until we get to the top of our range. Looking at the weekly and the monthly, you can still have higher targets up there. Higher targets like those other Fibonacci legs, like that one. I think that's 100%, right? I think that's 100% Fibonacci then. If you look at it, if you look at it also from a weekly perspective, you can see that the weekly was still bullish. I mean, on this zone where we re-entered, if you notice here, you know, high, low, high, low, high, low. Then this was a pullback. That was a weekly range pullback there. Then, boom, they continued. They continued with structure all the way, all the way, all the way. So the entry here, it was literally around here. Stop loss obviously was below this leg like this. They went up, came down, shifted again, went up, came down, shifted again. So by the time they shifted the come back down, you can even exit. Then when they come back, they reshift here. You can just re-enter. You understand? So even as they kept going up, they're now maintaining. Then they reshifted again up the something like this. So up there, you could have taken cells. Taking those cells, maybe you're targeting these legs here as potential legs where you're anticipating them to get to. Right. So guys, for this episode, I think I'll stop here in 2005. I started in 2003, went into much deeper details. Yeah, if you follow your highs and lows, they literally maintained, even if you use 8 hour as extra confirmation. If you look at your highs, your lows, that was my high, that was my low. They came back to my high, they broke, high, low, high, low. So they maintained that overall dynamics here. So even the shift here, it was clear. They took out my low, came back here, took out the lows, other lows there. So you could have even entered around there. Something like this, something like this. So around here, that's where you would have also exited. because you had this now as a range, of which that being a range inside here, they literally shifted also. They had also started shifting inside there. So them shifting inside there, that was also a sign to come out of your cells. Even 4 hour, I believe it also confirmed the same similar thing there. They shifted internally. They actually, so even if you bought initially here, you would have made this profit by the time they come back. Even if they took you out on break even or you closed some profits, you could have even joined in here 1 hour, 30 minutes, you would have even gotten the entry here. If you didn't use that and you used this, by the time they came back to this low and gave you this shift, you would have also re-entered buys again. If ever that's if ever you didn't use those 30 minute whatever. So in this case, you're targeting back up there like that. If they shift along the way before they get there, that's not your problem. That's not even your problem. That's not even your worry. You just do what you're meant to do. So if you follow structure, the highs, the lows, they came back, they broke there, came back, that was a pullback, realignment there. That was an entry, came back high, low. Last low is this one, right? Because that was a high. Yeah, my last low is that one. So by the time you protect profits there, already you made good money. Already you made good money. By the time they now do all those shiftings to the downside, that's not even your problem. That's not even your problem. You have already exited positions up there like that. So going back to the weekly, maybe you just need more clarity on what will be trying to happen. So on the weekly, they broke major structure, so they can even potentially pull back way to this before the overall continuation. That's just simple uh analysis that you will now be doing, right? That will be simple analysis that you will now be doing just to give a projection of what they might be trying to do. So they took structure down, then they came back there, of which they, I believe, they also came back there and shifted. Let me go to 8 hour. So on any of these levels, they're going to nicely give you some entries on any of these levels. What's this now? It's moving too fast, too fast. Why did I put 10? So they on those levels now, if you see these levels that I marked, the structure came into those levels but never changed. That's a high, that's a low, that's a high, that's a low, came back here. They didn't change. So that not changing, that's what most people don't even understand. Whereby if you can't pick point, if you can't pinpoint where structure changed and where structure didn't change, you can't pinpoint all of them. So if you go to the weekly, there's also good information now. This good information is that here, after hitting that, we came back down, then we shifted up here. And that whole range that it gave pullbacks on the lower time frames, which was this low and this high. That was just a pullback. If you notice, if you look at it, if you also looked at the weekly, so here this was just the bottom of a range. So knowing that, you could have even taken buys here. Taking buys here, even if you're anticipating they may be to potentially drop there. If they don't drop there, if they don't shift structure there, I mean, that's not your problem. That's not even a problem. That's not even so here. That's where we could have bought. So buying there, even if we had a bias of saying, okay, once we get up there, we want structure to shift bearish, then we strike sell. If they don't shift that bearish that you're anticipating, that's not your problem. So in that level, that was a low, that was a high. They created a new high, gave a pullback. They didn't take this out. So they were still going up. Then they shifted up, actually, kept on buying and buying and buying. Then the only time that they changed was up there. That's the only time that they now changed to be bearish around this level here, around that level there, of which you would have entered the entry earlier, or even just here, even upon the pullback, they even have even entered cells. Obviously, when you enter those cells, in this case, you're looking at overall structure, whereby you broke major structure there. So you're still looking at these legs as your potential TPs. If structure doesn't change there, it's also still fine. You still keep on holding. You get my point. Go to the 8 hour. That's a high, that's a low. They came back for a pullback here. That was where you could have even entered more cells right here. Kept going high, low, high, low, high, low, high, low, high, low, high, low, high, low. So they kept on maintaining here. They kept on maintaining. By the time they come all the way down there, already those trades that are up there, They are now well protected. So yeah, even if you mark my last range here that I'm seeing, which is this low and this high. Our new low was this one. That was a pullback. And at the end of that pullback, that was an entry point that you would have also looked at, even from the 4 hour, even from the 1 hour. You could have also caught sales from that level there, right there. So even if you entered the stop loss above, you would have still made that profit. You would have still made that profit. So let me go to the daily and see what they are overall trying to achieve. So yeah, they haven't fully broken that leg on the daily. Oh, they did break. They did break, and besides breaking, they kept maintaining. If you look here, they kept maintaining bearish order flow. Remember what I said on the weekly, that if you look at overall structure, they broke there, and they can potentially come back to this leg before the upside shift. Even if you combine with the monthly, on the monthly, almost a similar idea, but on the monthly now, they didn't fully break up there. So guys, I'm going to stop here now for now in May 2005. Next episode, I'll take it from there up until we get to 2024. So guys, make sure you like the video. Make sure you're subscribed to the channel. Make sure you share with me your comments. And also make sure you're part of our community. The links to my community are in the description below. See you in the next episode. Definitely, it's coming tomorrow. Tomorrow during the day, definitely you'll get next episode. And we are still focusing on US 30.